Lyft stock rises more than 10% after company reports signs of pandemic recovery. Remember, they're not in the eats game. They're not in food delivery. They're just strictly in ride hail. We know what happened to ride hail in 2020. It went back drastically, almost 50%. Ride-hailing company Lyft reported fourth quarter earnings on Tuesday. The company beat Wall Street's expectations on revenue and loss per share. Its stock was up more than 9% after trading hours. Now, ride-hailing company Lyft reported fourth quarter earnings on Tuesday, surpassing Wall Street's top and bottom line expectations, but disappointing when it came to active riders. The company's stock was up more than 9% in after-hours trading, thanks to a beat on revenue and signs the business is recovering slightly from the pandemic. Lyft is also on track to become EBITDA profitable by the fourth quarter, with a chance that could be achieved by the third quarter, CFO Brian Roberts said in the company's earnings call. Here are the key numbers. Loss per share, 58 cents versus 72 cents expected in Refinitiv survey of analysts. Revenue, 570 million versus 563 million. Active riders, 12.55 million versus 13.2 million. Expected in a FactSet survey. Revenue per active rider, $45.40 versus $42.20. The company's revenue and ridership jumped from the prior quarter results of 499.7 million and 12.51 million riders, suggesting the company is continuing to recover from COVID-19 headwinds. However, it's still considerably down from the same quarter last year. For the full year, Lyft reported revenue of 2.4 billion compared with 3.6 billion in fiscal year 2019. Well, we all know that 2020 was a disaster for many people, privately and business-wise. The company said demand near the end of the quarter was also negatively impacted by a surge in coronavirus cases and efforts to slow the spread of the virus. Roberts said in a statement that Lyft expects a growth inflection beginning in the second quarter that strengthens in the second half of the year. Lyft reported a net loss of 458.2 million for the quarter, up from a net loss of 356 million in Q4 2019. The company said its fourth quarter loss includes 138.1 million in stock-based compensation and related payroll tax expenses. The company said its net loss margin for the quarter was 80.4% compared with 35% a year ago. Its adjusted EBITDA loss for the fourth quarter was 150 million, a 19.3 million increase from a year ago. It's better than the company's most recent forecast for an adjusted EBITDA loss of less than 185 million. The company said its adjusted EBITDA loss margin for the fourth quarter was 26.3% compared with 12.9% a year ago. EBITDA refers to earnings before interest, taxes, depreciation, and amortization. Lyft also reported 2.3 billion of unrestricted cash equivalents, and short-term investments. The company has failed to bulk up its additional segments in the same way that its main competitor Uber has done in the past year. In an effort to replace revenue lost from the coronavirus pandemic, Uber focused on its food and delivery segment, Uber Eats, and shed some of its travel-related segments. Lyft has yet to grow a food delivery business. The company said last quarter it's working on expanding delivery and was consulting with restaurants and retailers. So check it out. I'll leave you the link below if you want to go over it again. A huge shout out to my sponsor, Cover, Kover. Gig protection plan start at $7 a month. Any questions? You could just hit that link beneath my video. You get 1 month bonus, 1 month free, by the way, if you use the Rideshare Professors link. What do I like about this gig protection plan? One thing really sticks out to me, the legal protection. Any of these companies deactivate you over a wrongful termination or wrongful deactivation, even if you're a 5 or 5-star rated or 4.95 rated driver, it takes one wrongful report to mess things up, and in kicks their legal protection. So check it out. Drive safe, my friends. Wear those masks, disinfect your cars, and let me know what you think of Lyft Q4. When will they finally be profitable?